Hello and welcome to today's session. Thank you so much for joining. We'll be getting started in a moment. Today's session is going to be a very popular topic, so we appreciate everyone taking the time to join. We're just confirming the audio here. So it sounds like the audio is working, so let's get started. I would remind everyone to please ask questions in the chat, and I will answer the questions as we go through the slides. I would also ask you to please like this video and please subscribe for more videos like this. You get notifications of our weekly webinars. So as you can see from our opening slide here, the topic for today is the December 31st deadline for setting up a plan for the tax year 2020. And so this is a hot topic right now. And so we're going to talk about how there's really just 3 easy steps that you need to complete in order to be able to preserve the right to make both employee as well as employer contributions for 2020. And I see we've got some question already. Thank you so much for asking that question. So what we'll do is we'll go through these slides and then we can talk more about the details of some of these questions here. These are some great questions, so please don't hesitate to ask and we'll get all the questions answered. So again, just to set the stage, we're talking about a solo 401k, which is for self-employed individuals. And one of the main reasons that people want to set up accounts is the ability to make contributions to the plan. And so one of the questions here is, well, okay, well, when do you have to set up the plan by? So for 2020, you need to set up the plan by December 31st. And so we're going to talk about, as you can see on this initial slide here, some of these key points are going to be, what does it mean? So you need to really just sign. When do you fund the account? When do you open the account? So there's a difference between the plan, which is really the documents which create the plan, because all 401ks fall under the trust umbrella. So really it's those 401k documents which create the plan versus actually making the contribution, so depositing the money into an account as well as opening the account. We're going to talk about the different types of contributions. So you got employee as well as employer, pre-tax, Roth, and voluntary after tax, and then how much you could contribute for the tax year 2020 in 2021. So let's go through these slides and it'll become more clear, and then again, ask questions as we go through it. So really, all that needs to be done by December 31st, 2020 to preserve the right to make those 2020 contributions all the way up until your tax deadline in 2021 are these steps that are laid out here. So step 1, you complete the online application and make payment. So that takes about 2 minutes. It's right there on our website, 24/7. You can pay through our secure payment portal. Step 2 is we prepare the IRS approved solo 401k trust documents the same day. We email those to you all pre-filled out. You can download them from our secure website and then sign them that same day. And that completes everything that you have to do before the end of the year in order to have the plan established and then have that ability to make those both employee as well as employer contributions sometime next year on or before your business tax return deadline, including any timely filed extension. So really as easy as just these 1, 2, 3 steps. And then we're going to go through these slides and we'll break these down a little bit further in terms of these 3 key steps. So step 1 just takes minutes to complete the online application. So we're just gathering the information that we need in order to draft the solo 401k documents for your self-employed business. So it's very straightforward. It's things that you should have readily available. So like your name, the name of your business, what do you want to name the plan? You just 2 words, and the word trust is all you need. It doesn't have to have your name. It doesn't have to have the name of your business. So we ask about, the type of accounts that you may want to roll over, and other basic information that we need in order to draft those IRS approved documents for your business. So you do not need to have a business we don't have to have a formal legal entity for your business. As far as some common questions, you don't have to have an LLC. You don't have to have an EIN number for your business. You don't have to provide us that EIN number in order to establish the plan. So you do need an EIN number for the 401k though. That's one of the key requirements. That's the way that we've always done it for our solo 401k plans. And we will obtain that employer identification number for the 401k. That doesn't need to be obtained though by the end of the year. That can be obtained this year, or it could be obtained in 2021 at the time that the bank or brokerage account is set up. Step number 2, same day, we draft the plan documents. So that's again what creates the solo 401k, or the documents, because a 401k falls under the trust umbrella. So like any legal entity, it's the documents that create the plan. So examples, or those documents, are going to include the adoption agreement, the trust agreement, which appoints you as the trustee, allowing you to make all the investment choices. We provide a copy of our IRS favorable determination letter, which confirms that it's a qualified plan. Obviously, you have to make those contributions into a qualified plan. You need to set up a qualified plan in order to be able to preserve the right to make 401k contributions anytime up until your business tax return deadline, including any time they filed extension next year. Again, the EIN number is obtained from the IRS. We handle that as part of our services, and it can be done next year. And I see we've got another question. Thank you so much for asking that question. We'll go through this slide and then we'll start to answer some of these questions. Step number 3, same day, you sign the establishment documents. So again, we draft the documents. We email you a link where you can download them from our secure website. They're all pre-filled out specifically for your business. All you have to do is sign the documents. There's step-by-step instructions, very clear. Of course, we can go over the documents with you over the phone. And that's really it. You don't have to return them to us. You don't have to set up the account. You don't have to get the EIN number. Once you sign the documents, you've met the deadline. So there was a question as far as completing the application here, so we'll knock that out. So how do we name our solo 401k trust? So really, you could use any 2 words in the word trust. Those are the guidelines. So for example, if your business is called, Jones Engineering LLC, you could call the plan Jones Engineering Trust, or you could call it something different. It doesn't have to match the name of the business. If you don't have a name for your business, you could pick something different. It doesn't have to have your name in the name of the trust. So a lot of people don't want to have their name in the name of the trust for privacy considerations. So let's keep going. And we're going to break down a little bit further what it means to sign the adoption agreement. So again, you just need to sign the adoption agreement by the end of the year. So you just download it again on your desktop, or however you're accessing your email, print it off, sign it. You can even sign it electronically. It doesn't have to be a wedding signature. That's going to preserve the right to make both the salary deferral, which are called employee contributions, as well as the employer contributions, which are also known as profit sharing contributions, anytime up until your business tax return due date in 2021, including any timely filed extension. So you're locking in that benefit. You can take your time. So now, or in 2021, you can open up the account as long as you do it so that you can make that contribution before your business tax return due date, including any timely filed extension. You obtain the EIN number. Of course, you need the EIN number in order to open that account at a bank or a brokerage, because the account is going to be associated with the EIN number, which is specifically obtained for the solo 401k. And then make the contribution. Both the employee as well as the employer contributions can be made in 2021. And we've got some follow-up questions here. So before we get into some of the more detail, let's knock out some more of these questions. So would not naming our trust in our name affect us opening the bank account? Some banks have certain strict rules for some reason. So I'm assuming you're talking about naming it in your own personal name, like John Smith Trust. I do agree that some banks or bankers, more specifically, can get thrown off with a name. So we haven't really heard that, but really the issue with using your personal name is, we haven't heard the specific issue that you are bringing up, but really the issue with using your personal name goes more to privacy. So for example, one of the most common reasons that people set up accounts with us, because they want to invest in, say, real estate. So you may not, a lot of our clients don't want to have their name on the title that owns the real estate property, that's the rental property. They may want to have a little bit more privacy and therefore pick a different name. So let me see here. Let's look at some more account opening questions, and we'll get all these questions answered. I do appreciate all the questions. So we'll come, I think these other questions, we'll get to these. We'll get to all these questions. So please hang on. Let's go through some more of these slides. Do I have to obtain an employer identification number by December 31st, 2020? So the answer is no, and we will obtain it for you. You really need to have the EIN number when it's time to open up the account. That's the bank account or the brokerage account, which we handle all the forms to open up the brokerage account or the packet that you would need to open up a bank account, including obtaining that EIN number from the IRS that's specifically for the plan, so not your business EIN. All you need to do is sign the documents before December 31st. And that's what establishes the plan and preserves the right to make those contributions in 2021. So another good FAQ here. Do I have to open the solo 401k bank accounts by December 31st? No, you do not. Because, and this is clear based on IRS publication 560, that both the employee as well as employer contributions can be made anytime up until your business tax return deadline, including any timely filed extension in 2021. So as long as you have established the plan, and what establishes the plan is signing the documents. So all you need to do is sign the documents before the end of 2020, and that locks in your ability to make those contributions. You could open up the account, you could obtain the EIN number, you can make the contributions, meaning deposit the money next year, anytime up until that tax return deadline for your business, including the extension. And so this again just emphasizes it. That applies to both employee as well as employer. There is some sometimes some confusion, a lot of times from advisors, about both, whether that deadline applies to both the employee as well as employer, and it does. And that's clear, as we noted here, based on IRS publication 560. We've got another slide that actually has an excerpt from publication 560 to emphasize that. Here's that slide. So as you can see, you set up the plan by the end of the tax year. The last day for the contribution, and this is a qualified defined contribution plan. That's what a solo 401k is. You have up until the due date of the employer's return to do the elective deferral. That's the employee contribution, including extensions, as well as the employer contribution. That's the profit sharing contribution. Again, the employer's return, including extensions. So it can't be more clear than this. So another FAQ here is, if I adopt the plan in December 2020, how can I make contributions based on income that I earned in January of 2020? So you've adopted the plan, say next month, but you actually earned that income in your business, say in January of 2020. So the way that the documents work in the industry, really the industry best practice, is that those solo 401k documents that you sign in December, they're going to be effective as of January 1. So as a result, you're able to make contributions for any self-employment income earned and reported for 2020. My CPA tax advisor is informing me that the employee contribution must be made by December 31st, 2020. That's what, going back to the confusion that I alluded to before. Are you sure that I can make this contribution in 2021? So this is a common point of confusion. And the reason is because of the different deadlines that apply for a full-time employer plan. So one where you have a company with many employees, non-owner employees. So for those employees where they have a 401k through their day job, the employee contribution must be made by the end of the year. But the rules are different for solo 401k plans, which is made crystal clear by IRS publication 560, that both the employee and employer contributions, as we looked at on the slide, can be made up until the tax return deadline, including any timely filed extension. And logically, that also makes sense because a lot of times self-employed individuals don't know how much money they've made until after the end of the year. So they wouldn't be able to really know exactly how much they can contribute at the end of the year. They're going to have to wait until they've run all the numbers, and then they're ready to know how much they can contribute and make that contribution. So let's talk about the deadlines. So the solo 401k contribution deadlines depend on your self-employed business type and business tax return due date. So let's dig into that, what that means, business tax return deadline. So because the standard, as we've learned by going through these slides, is the business tax return due date, including any timely filed extension. So it really goes back to how your self-employed business is taxed. So if it's a sole proprietorship, or say a single member LLC, a disregarded entity that's taxed as a sole proprietorship, it's going to track your 1040 because that's where you report your self-employment income. So that's going to be April 15th or October 15th of 2021 if you filed a timely extension. However, if you're a partnership or an S Corp or your LLC that's taxed as a partnership or an S Corp, then your business tax return deadline is actually March 15th or September 15th of 2021 if you filed a timely extension. So it's important to keep that in mind, that it's really what's driving it is the business tax return deadline. If you're a C corporation deadlines, tax return deadlines are the same as the 1040. So it's April 15th or October 15th. So that's the deadline by which you need to have the EIN, you need to have the account, and you need to deposit the money by in order to have that contribution count for 2020. So that takes us to the end of the slides. Let's go back to all these excellent questions. So we'll just, the first one so I appreciate everyone's patience. So the question is, contribute up to $63,000. It depends on W-2 salary. Is it 25% of W-2? So that's a great question. So really, it's important to keep in mind that your ability to contribute is based off of it's based off of, number one, how your business is taxed. So if your business is taxed as an S corporation or a C corporation, it's going to be based off of the W-2 wages that you get from that self-employed business. If you're 50 or older, you can really contribute up to $63,500 because you have the catch-up contribution of $6,500, assuming that you have the self-employment income, meaning the W-2 wages, assuming that you're not contributing to another plan like that you might have through a day job. So the profit sharing contribution is limited to 25% of your W-2 wages. And so let's say that your W-2 wages are $100,000. In that case, you can contribute 25% or $25,000 as a profit sharing contribution. And of course, that would count towards your overall limit. So hopefully that answers that question. So we answered those two questions. Next question, if we file an extension, then the contribution will be September 15th. So yes, and this is answered right here on this slide. So again, it's driven by how your business, your self-employed business is taxed. So if your self-employed business is taxed as an S corporation and you set up the plan, meaning you sign the documents, you sign up and we give you the documents same day, you download them, sign them, you're done, and you do that before December 31st, now you've locked in the right to make contributions from your self-employed business up until March 15th. Or if you file a timely extension for your business tax return, you have up until September 15th of 2021 to make the contribution. Another question here, can we use thank you so much for all these good questions. Can we use the SSN Social Security number to set up a solo 401k instead of a new EIN? So first of all, you don't have to provide your business. We don't need your business tax identification number in order to be able to set up the plan. So if you don't have an EIN number for your business, that's okay. I know a lot of the big brokerage firms do require that. And if you look at some of our other videos, we talked about that. But you do need a separate EIN number. So if you're a sole proprietor, you don't have an EIN for your business, that's fine. You can sign up. The key is that you are self-employed, you don't have any full-time W-2 employees working for you, and you report that self-employment income on your taxes. So you will need an EIN number for the plan. You don't need it by the end of the year. We'll get it as part of our services. You just need it when it's time to open up the account for the solo 401k, because you need to have the account opened up under the EIN for the 401k. So hopefully that answers that question. Next question here is, do we need to open a bank account under the trust? So yes, in simple terms, yes. The account into which you will make your contribution needs to be set up under the name of the plan and under the EIN number for the plan. And if you're making different types of contributions, like let's say you're making pre-tax contributions and Roth contributions, then you've got separate sub-accounts. If you've got multiple people participating in the plan, let's say it's a husband-wife situation that both work in the same business, they're both realtors, they both have one plan for their business and they're both making contributions. So in that situation, each spouse is going to have their own separate sub-account. And we will guide you through the process to get those accounts set up. It doesn't need to be done until next year, as long as you set up the plan, meaning sign the documents by the end of this year. Okay, great. So another question, what if I already have a solo 401k with another provider but want to use your plan? Is the process any different? It is slightly different because that's going to be considered a restatement. So think of that like a cut and paste. So we're going to cut out your existing plan documents which govern your plan. We're going to draft it as a restatement. So we need to know the original effective date of your plan. So one of the questions on our online application asks you if you have an existing plan. You would say yes. You would put the original plan effective date, which is typically January 1 of the year that you set up the plan. You can find that in the adoption agreement for your existing plan. So that when we draft the documents, it relates back to that original effective date and it has the restatement date. Depending on where your plan is, you may need a new account. Let's say you've got a quote unquote free solo 401k at Fidelity. So that account would be closed. A new account would be set up under the restated plan. We would prepare the documents to set up the new account, and then the assets and cash would be transferred over to the new account. Good question. Hopefully that gives you the information you're looking for. If we transfer from Ubiquity, can we change the name of the trust? So I understand that you're talking about a restatement of a solo 401k at Ubiquity. So yes, you can change the name of the trust in simple terms. So one consideration with a restatement is if you already have a certain investment that's titled in the name of the plan. If you have it at Ubiquity, you probably don't. So in that case, you could just choose a new name for the trust as part of the restatement process. If you do have an investment, you may want to keep that same name. Certainly if you already have an EIN for your restated plan, keep the name that's associated with that EIN for your 401k. Thank you so much for signing up. I appreciate that. And thank you so much for watching these videos. Hopefully everyone's finding it helpful. And then A follow-up question, it looks like, from prior discussion. This is the same as set by IRA guidelines for contribution. Yes, this is following up on our discussion of the 25%. So yes, so you aggregate, it's the same limit, it works the same way as 25% of the W-2. So in other words, you can't put 25% in the set by IRA and then another 25% into the solo 401k. Hopefully that answers that good follow-up question. So next question. After we do our 2020 taxes, will you guys help us figure out how much to contribute in 401k pre-tax and in after-tax? Absolutely. Yes, we field those types of questions every day. We have a wealth of information on our website. We do deep dive webinars that go over how to make the contributions, how much you can contribute, how to report it on your taxes. And obviously, we'll also work with you directly via email or on the phone. So absolutely. Yeah, that's like we talked about. As long as you set up the plan by December 31st, you've locked in the ability to make the contributions. So if you don't know how much you're going to, exactly contribute because you haven't figured out exactly how much you've made, that's okay. Come back to us and we'll help you figure out the exact amount that you can contribute. Next question. The IRS limits the max retirement contribution to $57,000. Roth IRA is not part of this max allowed, correct? Thus, someone less than 50 can contribute the max 57 in another 6K in the Roth IRA. So yes, the Roth IRA contribution limits are not aggregated with the solo 401k contribution limits. So of course, you would have to have the self-employment income or the income, if you're talking about Roth IRA contributions, to justify both contributions. And of course, keep in mind that there are limits. So if you make too much money, if your AGI is too high, you cannot make a Roth IRA contribution. Of course, with the solo 401k, you don't have those income limits. So there's no income limits that apply to Roth 401k contributions. Hopefully that answers your question. If I have more questions about restatement, who would I speak with and how? So please just call us or email us. You can call us at 1-800-489-7571. That's 1-800-489-7571. Or you can email us at business@mysolo401k.net. So I think we came to the end of all the questions. Just going to scan through here, make sure we didn't miss anything. So this has been a great session. I really appreciate everyone's participation. And please like this video. Please subscribe. If you're watching this video on a recording, please ask questions in the comments and we'll get back to you within 24 business hours. So it looks like we've come to the end of all the questions. Thank you so much, everyone. Again, have a great day and appreciate all the participation.